Okay, let's start. Hello and welcome everyone. I am Vanshika from the Office of International Program and Events at World Law Alliance. I'm really excited to have you all joining us here in the conference, Blockchain, Fintech, and the Law, a precursor to WLA 2023 Dubai. We are also streaming this live on WLA LinkedIn page and the YouTube channel. Today, we are joined by really an amazing panel of speakers, Mr. Keener, Ms. Akshata, and Mr. John, and an eminent chair who would also be hosting the session, Mr. Patrick McPhillamy. He's an experienced professional with a demonstrated history of working in the legal services space as a lawyer, an arbitrator, and a mediator. He's the founding member of California Arbitration, resident representative of California ADIA ODIA International Limited, and the ambassador of Arbitrator Intelligence. His practice area includes business, commercial, corporate, criminal, insurance, intellectual property, personal injury, real estate, and trade law. He is a legal professional committed to protecting human rights and strengthening the rule of law. Thank you, Mr. Patrick, for taking the initiative to organize this panel discussion.
Thank you very much. So greetings to everyone, a warm welcome. Thank you for joining us. It's an honor and a pleasure to host and to moderate this conference sponsored by WLA alongside an esteemed group of professionals with expertise in legal and business aspects of blockchain and financial technology. First, I'd like to introduce our esteemed panel. Forgive me if I mispronounce your names, starting with Akshata Namjoshi, who is a partner at Karm Legal and has expertise in the UAE and India. Prior to joining Karm Legal, she was working with leading law firms in India and UAE. She has advised high net worth individuals and corporations on banking, mergers and acquisitions, corporate debt restructuring, and corporate governance related issues. At Karm, she leads the Fintech, blockchain, artificial intelligence, open banking, and emergent tech practice. She's advised multiple clients on security token offerings, initial coin offerings, fundraising through seed and crowdfunding, setting up cryptocurrency exchanges, and deployment of public and enterprise blockchains. Additionally, she's advised clients on artificial intelligence in the financial sector and digital wallets and payment solutions. Our next panelist is Osman Callis, who is a managing director at Block Venture Studios. She's a technology leader with 26 years of experience, including 13 years in investment banking. She's passionate about the community and has been secretary of the Society of African Earth Scientists for over 10 years. She helps corporates, VCs, wealth management funds build game-changing portfolios of startup companies in the blockchain Web3 space. Next, we have John Oladipo, who has extensive experience in technology, law advisory, transactions, and litigation. He regularly counsels and represents fintech, insurtech, agri-tech companies. He offers the benefit of his expertise in those areas, having defended various lawsuits in intellectual property rights. As a seasoned lawyer, he has made immense contributions to the firm in those areas of expertise, which have awarded him representative and advisory roles for high-profile clients. He's also the author of scholarly written articles on issues on technology, blockchain, the Internet of Things, data protection, and other emerging technological trends. Last but not least, we are joined by Cantor Serving, who's a regulatory counsel of WireX, and is responsible for WireX's global regulatory affairs, including compliance with regulations and licensing requirements. Before joining WireX, he was acting as lead counsel and company secretary for an FCA-regulated EMI, and was advising startups on their regulatory compliance. He's advised banks, insurance companies, electronic money institutions, payment institutions, and virtual asset providers on various regulatory and commercial matters during his legal career, combining roles at top-tier law firms and in-house counsel positions. He's been working in multiple jurisdictions, including England, Wales, Turkey, and various European jurisdictions. So thank you and welcome to all. Before we get started, I wanted to just read a short summary of an article that I perused in Harvard Business Review. And it talks a little bit about the topics that we're going to be discussing today. So it says WebX or Web3 is being touted as the future of the internet. The vision of this new blockchain-based web includes cryptocurrencies, NTFs, DAOs, decentralized finance, and more. It offers a read, write, own version of the web in which users have a financial stake in and more control over web communities to which they belong. Web3 promises to transform it's the experience of being online as dramatically as PCs and smartphones did. It's not, however, not without risks and problems. Some companies have entered into the space only to find a backlash over the environmental impact and financial speculation and potential for fraud that comes with Web3 projects. While blockchain is offered as a solution to privacy, centralization, and financial exclusion concerns, it's created new versions of many of these problems. So companies need to consider both the risks and the benefits before diving in. So with that in mind, that backdrop, I'd like to kick off the discussion. The first question I'd like to put to the panel is, what are the challenges in high-tech industry relating to traceability and sustainability in connection with these so-called new technologies? So feel free to join in, unmute your mic, and let's start the discussion. Anyone? Any thoughts on that topic?
Right. I think I'll just take a crack at it. I mean, as a background, as you rightly mentioned, Patrick, I come from UAE, and so far UAE has done a great job at identifying a lot of regulations with multiple regulators, be it free zone financial regulators or federal regulators. Especially with traceability, and I'm not an expert in the technical side for sure. But with traceability, I think what the regulatory approach, at least in the jurisdiction I come from, has been that they've always focused on the controllers for any type of technologies that have come forth. So irrespective of the offerings of the technology, regulators have been very tech agnostic. So for instance, in terms of, let's say, decentralization, the regulators have been very clear that they would want to have an access to ensure that all the data and all the transactions which are conducted on blockchain are actually reported back to the regulators if it relates to the financial services. Similarly, even in cases where traceability issues could be a concern in terms of, let's say, data and data sharing, regulators have kind of ensured to put forth laws which eventually rest the responsibility on, let's say, the commissioners of such blockchains or commissioners of such data collectors. So I think from a legal perspective, it needs a bit of evolution in terms of the approach of regulators. It needs a bit of evolution in the sense of sustainability to an extent that it should be sustainable for either sides. It's not always easy for those to deploy blockchains and to be able to match to the regulatory expectations. And at the same time, regulators are finding it sort of difficult to implement the existing laws to the newer age technologies. So yeah, I'll just pause there.
Right. So it does sound like that a new wave of legislation is probably going to be required to supplement and to implement these technologies.
Absolutely, absolutely.
Yes, good, thank you. So how are other countries dealing with cryptocurrencies as a currency or as a foreign currency in the context of blockchain? So to encourage our panel to jump in.
Okay, so can anybody hear me? Can you hear me?
Yes, yes.
Oh, yeah, okay. So sorry if I get the question right. The question is about blockchain being a legal currency in our jurisdiction, yes?
Yes, that's fine.
Oh, okay. So yes, in Africa, okay, so and in most aspect of the jurisdictions that we cover, you would notice that the central banks of, for instance, Nigeria, where I come from, they've issued out circular to say that cryptocurrencies are not legal tenders. Right. So, for instance, in Nigeria, Section 2 of the CBN Act, that's the Central Bank of Nigeria's Act, states that it's only the CBN that has the power to issue out legal tenders. So there are, let me say, opinion or there are reasons for issuing out those circulars is that these currencies, cryptocurrencies, did not emanate from them. They do not know, some of them, they do not know the originator, and it is susceptible to, it is highly volatile, for instance. Yes. So, these are many other reasons. The CBN of Nigeria has come out to say no, they do not recognize cryptocurrencies as legal tender in Nigeria. However, the Securities and Exchange Commission recently issued out a regulation, right? Somewhat regulating crypto assets. So, and then you see that most countries are actually following these trends. That their Securities and Exchange Commission would issue out, guidelines to say that, okay, cryptocurrency is not a legal tender, but then you can trade it as an asset, right? You can, for instance, in US, it's crypto commodity, right? So, same model applied in Nigeria too. Yes, thank you.
Thank you. So it seems like, notwithstanding that it's not recognized as a legal tender or a currency, it's still there to stay. Is it fair to say that it will coexist along with central banks and fiat currencies, or do you think that it will eventually overshadow and replace them?
Okay, so when you're talking about central bank digital currency, for instance, truly, yes, Nigeria has INERA, that's Nigeria's own form of central bank digital currency, which most countries too have. For instance, Bahamas has sand dollar, right? And most countries are actually, they're out there, trying to indicate interests in issuing out their central bank digital currency. For instance, Sweden, Norway, India, actually, and even some other African countries like Ghana and Namibia, right? They've also issued out, circular to say that they're interested in studying how CBDC would work, right? So personally, in my own opinion, I think that at some point we'll get to a stage where, most of these countries or the Apex Financial Regulatory Body will come up to say that, yes, we've initially issued out circulars to say that cryptocurrencies are not legal tenders. Yes, we are still standing by that. But, with the introduction of our CBDC, you may be able to, transact to a reasonable extent, probably when they issue out, or probably when they, let's say, regulate, for instance, maybe, putting tax on the sale or the purchase of such cryptocurrencies, right? So I think probably in the later days, yes. So I think our regulatory bodies or the regulatory agencies will still come up to see how the CBDCs and the cryptocurrency will coexist.
Yeah, fascinating. So what to our panel? What are the benefits of using AI-based financial management solutions? What are your thoughts?
Maybe like if I need to say a couple of things about it, we definitely need to see more AI-based solutions in terms of many aspects of the financial institutions. I think we need these kind of solutions, especially fighting with fincrime. I think there has been a very important case recently. One of the challenger banks, Bunk, won against National Bank of Netherlands, and they actually won the case, and it was a clear indication that AI systems are actually as effective as manual systems when you're fighting for financial crime, when you're chasing the data, when you're chasing maybe the customer contact points. I think from many aspects, it's very important to support AI-backed systems, because eventually it is data that AI follows, and this they have the capability of doing so much more than our manual brains, to be honest. And when in every manual process there is a room for a human error, which creates risks for financial institutions, which needs to be dealt, which needs to be mitigated. I'm not saying AI doesn't have any problems, of course, but I think combining manual policies and procedures together with the AI-based systems will be the key and the norm for any financial institution, regardless of the jurisdiction, I could say. Not only in Europe and UK, but on the cross-border practices, we see more AI-based systems. And also, I think the same applies to the blockchain systems as well. Recent developments showed us that we really need, especially transaction monitoring, especially wallet monitoring, when it comes to the transacting in blockchain. And I think AI-based systems, both on transaction monitoring, both on sanctioning, both on blocking the mixers, blocking the illicit fund related wallets. I think they all will play a key role on adopting crypto in a mass scale, like worldwide.
Thank you. So we're getting some live questions. So I'm going to go ahead and share them with the panel. The first one is, what are the major challenges do blockchains have? What are some of the major challenges blockchains have in recent times?
Yeah, if I can just like maybe do the entrance and leave it to the other panelists, I can pretty much say that blockchain didn't have big problems, but like central exchange did. Most of the time, like recent events were not actually related to blockchain, not even in related to Bitcoin, but the idea and the founding principles of the central exchange and how they grow. I think apart, like we have to distinguish central exchange problems with the blockchain's problems. Recently, we have seen, especially Tornado Cash and some mixers and usage of this blockchain and blockchain-based cryptocurrencies by hackers or like by sanctioned entities. I think that was a big problem that blockchain and the people working on Web3, people working on the crypto needed to deal with. And but maybe just linking those two topics, I think like now we have more transaction monitoring, we have more oversight on origin of the wallets, and we can trace back everything in blockchain. So I think once we have this data, like which wallets are to be avoided, now we have more automation and more capabilities of tracing those kind of transactions, which would eventually which could eventually be used by like fincrime committers. And this is pretty much this was the biggest and original problem, but I think we are nearly getting there, and we are developing with a huge speed in terms of mitigating those risks, especially on the blockchain.
Would anybody else like to weigh in on this question or pick up?
I think I'll just quickly add that just like my esteemed panelists mentioned, blockchain has had its fair shares of challenges when it comes to the hacking incidents, which have actually rocked and I think pulled it back every now and then. In addition to that, because regulators have tried to implement the similar principles of centralized exchanges to, let's say, blockchain-based exchanges, there's been a lot of friction in and around that, yet they've actually stopped short of implementing it completely, right? So from a perspective of saving market integrity, one can say that not much has happened. So a lot of users have lost money because of that. Everyone who invests in crypto right now would know that there will be random announcements, there will be random comments from so many influencers, from people who are in a position to sort of impact how prices go up and down in crypto, and that has significantly impacted. So while we have a lot of focus on how to set up exchanges, or let's say how to set up blockchain-based trading platforms, the same concepts or the same jurisprudence of how you save market integrity in terms of traditional markets is something that has not seeped in. And the truth is that every time people lose their money while they're trading is also the time when suddenly the market sentiment, or let's say the general sentiment of the public in blockchain as a technology or the offshoots and the use cases starts to go down. I mean, it's very obvious that with the FTX, something similar has happened. Suddenly, it's not just FTX, it's many other crypto exchanges which have started to face a similar problem of drop in user volumes, drop in trading volumes. That's purely because we haven't done enough to save the integrity of the use case itself.
Yeah, I concur. And I was reading it in the Harvard Business Review article. They were talking about Bitcoin and how it's had its ups and downs, and they even, call them crashes. Obviously, the FTX debacle rattled the market, and a lot of people have said or thought Well, it's a big bubble. It's going to, pop or crash. But it seems to have resilience. What are the panel's thoughts?
I'm sorry, I didn't get that.
So do you think cryptocurrencies are here to stay, or do you think that it's a bubble and here today, gone tomorrow?
Okay. Wow. Okay. Personally, I'm a fan of crypto, right? So I'm pro crypto. All right. So, but then we know that crypto has its challenges. Blockchain innovations as they have their challenges, right? So based on the whole issue, for instance, the FTX issue now, there are a lot of FUDs out there. People are, trying to take their money out of, their exchanges and all that. But then I think personally, it's a matter of, it is just a matter of time because, for instance, there's another Bitcoin halving coming up, right? And then when people see that, the crypto market is coming up again, right? Human beings, by instinct, it's something we can't control, except maybe you're a pro, manager or something, right? So it's not something when people see that the prices are people will say, oh wow, it's pumping, going on a bullish run and all that. That people will definitely go on and it's just we are just humans. I think that's what people would would do. So to the question asked, I think I would like to drop something, right? So one problem that blockchain has that is very obvious, it's regulation. Our regulatory agencies all over the world, they are, really racking their heads to see how to, try to solve or, try to guide investors or, their citizens, into trading, cryptocurrencies, for instance, right? So on one hand, cryptocurrency has its own issue. Then when we now go beyond cryptocurrency, because blockchain is just the technology, it's the underlying technology. There are so many innovations on that blockchain. For instance, the metaverse, right? NFTs, smart contract, right? So for instance, metaverse. So if something, can we say a marriage, for instance, connected on the metaverse is validly done, right? So if you are in your jurisdiction and then you have your, for instance, marriage act that guides how marriage is done. So you conducted the marriage on the metaverse, and can you say that marriage is validly conducted, for instance? Or can you say, can someone really commit a crime on the metaverse? That's on one hand. On the other one, the NFTs, there are a lot of issues on, intellectual property, infringements on, on NFTs, right? But although we have cases that, they've, put the matter to rest for now, right? So, but then there are, new issues coming up when it comes to blockchain. So I think one issue with blockchain is regulation. Yeah, thank you.
Thank you. Yeah, and definitely due diligence, because these tokens that represent valuable assets still require people to be prudent, to take the necessary actions and efforts, to have experts to examine the assets, to verify their authenticity, and so forth, to make sure that what the token represents, really, that's what it is, and that you're not being duped. Great. Fantastic. I'm very, that's a very fascinating topic too, about the metaverse and social relationships and marriage and things of that nature. It seems to be really widespread, pervasive. It can really just, I think, influence all aspects of our lives, not just financial, but social and so forth. Even voting, I can see that could be done on the blockchain. It may even be more secure because decentralization with computers worldwide. So if you hack computer A, you won't get computer Z or Z or those in between, presumably. So yeah, there's certainly enormous capabilities involved. So another question we're getting, it's a very general question. What are the current capabilities of AI? Perhaps we could sort of narrow it down. What are those capabilities in terms of what we're talking about today, cryptocurrencies and blockchain and so forth? I think I kind of talked about it a little bit. I know you expounded on it. Anybody else want to weigh in or?
Yeah, maybe I can just give a bit of entrance to that topic. I think when we're talking about the blockchain, or like maybe a bit general in financial services, now we see a lot of AI-based products, especially on onboarding or transaction monitoring, as I just said. Like most of the, for example, distant onboarding tools, they can work on AI based, and they can be worked on fraud prevention. They can be worked on easing the customer journey when you're getting onboarded to a financial institution, and it can make the financial institution's life easier in terms of KYC, EDD, CDD, or transaction monitoring. As I said, that we have always tend to see the good parts of the AI, but actually I personally think that it always needs to be backed by a manual system, as primarily you're using the AI. You also need to back it up with the manual system, because both systems, both manual and AI, automated AI systems, they have their own problems. And there is also a data aspect of this issue, that, for example, you can't just leave people on automatic decisions, especially when it's a negative decision. So this is a requirement in EU with regards to data processing. So you can't process people's data solely on automated systems, especially if you're going to give them bad news, like I can't onboard you, or I can't process this transaction, for example. So so AI is actually getting more and more involved into our daily lives, but it doesn't mean that we're going to give the control. And if it's the concern that no, they're not going to just start killing us in a short amount of time.
Yeah, thank you. We've got a third kind of related, very general question. It says, what are the dangers of artificial intelligence? Do the panelists think that it will affect human intelligence? Just to kind of kick off that discussion, I think Professor Hawking said it depends on who controls it in the short term, and whether or not it can be controlled at all during the long term. So what are the thoughts? What are our thoughts on this topic?
Okay, so okay.
Yeah, please. I was just going to ask you.
Right.
Okay, we can come back to John. Go ahead, please.
Right. All right. I don't think that it will really affect human intelligence. I mean, there's a high possibility, though, that a lot of our processes will get automated and get replaced. A lot of financial system processes, at least as a fintech lawyer, I see getting them replaced with AI-based solutions. But really, it's only dangerous if you let it become dangerous. I mean, I feel it's just human nature to continuously question the technology that comes in. Many years ago, when web came, everyone thought that it's probably going to ruin everything, and it's going to ruin the traditional financial systems, and we had all sorts of ideas. It took some time and it took some mistakes, but it definitely was required evolution in generally the history of mankind, right? And I think AI is going to pretty much be the same. If you're the one commissioning it as companies, you need to know where it needs to stop. For any regulator, like I mentioned earlier, the biggest concern is that are people losing money? if you don't automate AI to an extent, especially in the trading and financial systems, such that it can determine what happens with orders, it can determine what happens with finances, payouts, dividends of people, purely based on predictions and purely based on calculations. I think there's a lot that we can do with AI. It's supportive as a technology than it is destructive.
I think so too. So John, did you want to weigh in on that question?
Okay, so actually want to speak on it from the aspect of robo advisory, right? So most countries actually have regulations, trying to say that, okay, if your platform or if you have like an exchange that has AI, if there's an AI that, advise sort of some people or your investors, to trade or to play certain trades. The thing is, it's still the human, it's still the investors that will still place the trade, right? It's just for the AI to guide to, okay, I think it's better to buy probably at $1.1 and sell at $1.4 or something, right? So because it has calculated the margin, the market trends, and all that. And I think that's one of the the benefits of artificial intelligence when it comes to the financial industry, right? So to talk about the what the demerits or the disadvantages, you see, I think, my opinion, that I think AI is actually affecting human intelligence, really. My opinion, really. So, okay, so because I feel that, just like what Akshata, mentioned, most of what we do on a daily basis that tends to train our brain muscles, it's now automated, really. So what we just do is just to just do the minor work, just cross-check, look at the templates. AI now generates templates for people who are not lawyers, right? And then lawyers just tend to look through, that's why, okay, so personally, I've seen, companies whose terms and conditions are, some very, very funny, clauses. And in my mind, I was like, oh, who did this? And then you find out that probably it's an AI generated document, and probably the lawyer who was contracted to vet just felt like, okay, maybe it's just just look through some clauses and feel like, okay, it's good, whereas it has some errors in there. So for me, I think it's actually affecting us. We just need to know where to use it, and it's of utmost importance, really. So yeah, thank you.
Thank you. Yeah, I think we still need to be the managers. I read something recently too about patents and AI ownership. And I think there may be cases that are either before the courts or they're coming where the issue will be where a certain amount of knowledge was then taken to the next level by AI, and a certain invention was created by AI, and the issue is whether or not AI should be the owner or whether the person behind all of that should be the owner. And I think it's going to be a question. I think that's a fascinating question.
Actually, I think it has actually been resolved in some jurisdictions. For instance, South Africa, there's an invention by Stephen Taylor, right? And the Supreme Court of South Africa ruled that AI can actually, own products. They can lay claim, but it's actually, thinking somehow, really. But then that's after 16 jurisdictions have actually, ruled that AI cannot, because, for instance, if you look at maybe the Copyright Act or the Patent Act, you see that it is expressly stated there in most jurisdictions that only human beings, natural persons, right? Natural persons, not even companies, natural persons can own, intellectual property. But then, things are changing, technology is bringing new things. And then I think for some of these things to, come into place, most of our laws need to change.
Yeah, I do too. I think there will be some resistance, but I think eventually, as we see the benefits and just the exponential, taking something to the next level, that really AI needs to have its place at the table too, in terms of IP ownership and so forth. Yeah, this is definitely a fascinating area, and I think you'll see, as you said, a patchwork or quilt work of rules, regulations, legislations, and probably a constantly changing landscape. So yeah, this is something that I think will be on the horizon for years to come. So we have another question. Says, what are some of the challenges banks face when implementing an AI strategy, and how can they overcome them? What are some of our thoughts there?
Yeah, maybe.
Yeah, please.
So yeah, sorry, sorry, jump in, but sorry. I think we kind of touched on that. The biggest issue that I see that we need to combine different solutions all together to make it workable. And when you're implementing AI, I think first you need to think about the continuity. So in order to mitigate this, you need to combine different methods like manual methods, AI automated methods all together. And the other issue, apparently, as I just mentioned, the boom case could be the regulation. Sometimes regulators don't think that AI can solve the problem, so they don't write the regulations as AI could solve the problem. And when you implement an AI, although it works very well as maybe better than the manual solution, you can have problems with the regulators, like challenge some of the banks did, as example in the Netherlands showed us. However, I think there is a better understanding of AI or implementing AI in terms of creating solutions, both in financial sector, blockchain, or elsewhere. And I think we are on a good path to use it more on our daily lives and products and services.
Yeah, I think so too. Somebody made the statement online. We could assume that it would be a symbiotic relationship. I think that's probably the sentiment of a lot of us. And I think some of it's a question of power sharing and delegation. Perhaps wanting to protect our turf, so to speak. But I think as we see the benefits and just how much better AI can be at a lot of some of the tasks that we have to undertake on a daily basis, that there will be this kind of relationship. Another question we have here, what's the big deal about SAS or SaaS fintech solutions?
I think I'll just quickly take that. So we, at least in the region, we've seen a lot of SaaS solutions come up in the fintech and payment space. I think the major aim and the reason why they have picked up steam, of course, is because with software as a service or with technology as a service, many of the players are actually able to evade regulations. So that's where it typically starts, and that's what I've seen as a lawyer happens very often. But at the same time, many of the traditional financial systems, many of the traditional payment systems, and I've seen this specifically the most in the remittance and fund transfer space, they have largely benefited from such solutions because they'll potentially come across fintech players who have the technology and the setup up and running, and they will be able to plug it into their traditional systems. Both the parties win because one is a financial institution which can support with a heavy duty license, a heavily regulated license that a fintech will take years to get. And the fintech, on the other hand, is able to bring in speed and clarity with the solutions that they've provided. So I've I've dealt with many clients who have created brilliant solutions which have increased the speed of client onboarding, KYC verification. In addition to that, fund transfers have become insanely faster as compared to what they used to be. And I think that's the whole buzz around SaaS in the fintech and payment space, because they're benefiting a lot of people and a lot of players in different ways.
Yeah, I think speed really is a major benefit. Yeah, definitely. Thank you. So another question we're getting is, could the panel weigh in or outline some of the big trends in fintech?
Right. So I think I'll just quickly start from the Middle Eastern region. Like I mentioned, the trends in fintech that we have seen is definitely cross-border fund transfers have increased significantly, especially during the pandemic. The expatriate population, of course, utilized multiple avenues that fintech had to offer for fund transfers. So many of them couldn't visit their home countries for I don't know how many years or how many months at a stretch. So definitely fund transfers, I think I've seen it as a big trend. In addition to that, I have been lucky to work with some of the BNPLs. BNPL is picking up really, really fast. And in addition to that, many other models of deferred payments, whether let's say it's just BNPL, or if it is small term loans, micro lending solutions, micro payment solutions in a deferred environment. I think that's those kind of solutions have picked up steam quite a bit. And crypto payments is definitely the next big thing. And I'm actually honestly yet to see how regulators are going to sort of deal with that, where the traditional concepts of payments get blended with crypto, and whether they're going to have licenses for it, whether they will treat it as at par with the fiat currencies is something that remains to be seen. So yeah, my top three would be cross-border fund transfers, BNPLs, and crypto payments.
Yeah, fascinating. I think it will be enormous benefit for SMEs and just business in general. Great, thank you. Yeah, anybody else want to weigh in on that one?
Yeah, maybe I can just give a bit of insight from UK and EEA perspective, as I'm primarily working on those jurisdictions, despite we have like offices all around. I think in the UK and EEA, definitely buy now pay later is a thing. It has been a thing. It has seen its peak with Klarna and some buy now pay later companies getting valued at like billions and dozens of billions, and now they're facing a bit of reality. And apart from that, we have seen crypto valuations going billion-dollar crypto companies, but now also getting a bit more realistic valuations, especially the centralized ones. From what I see, we see a huge number of corporate expense providers. So what is a corporate expense provider? It's basically a card provider which usually works B2B with a capability of providing B2C cards or limited payment capabilities for companies to make it available for their employees or contractors or suppliers. So this is what I see as a rising trend, and I've seen many European companies are now opting in for that. Why? Because it's easy to track your expenses. It's easy from accounting perspective. So it's one of the big trends, and obviously crypto is not stopping. Although centralized exchanges are seeing more realistic valuations, we see a huge rise on DeFi, non-custodial wallets, which also like Wirex we are also offering, and for example on-chain B2B like P2B lending in DeFi space. and blockchain itself. And also we see many crypto lenders and as I said, like micro lenders or B2B P&L companies as well on rise. So to summarize that, I think now we are getting more specialized products than a couple of years trend of B2B cross-border payments. It was a trend a couple of years ago, but now we have to go like more specialized. So crypto, okay, that was a trend a couple of years ago, but now specific products like P2P lending, non-custodial wallet, or for example, blockchain-based, for example, certification products. So they are now on rise. So buy now, pay later, it was on rise, but now you have to be more specific. You know, like if you are focusing on the B2B, if you are focusing on a specific target group, now they're on the rise. So, and also with regards to the card issuance or just B2B payment capabilities, now you have to be more specific. You have to be a corporate expense provider. You have to have some environmental, side benefits that you provide or to your customers. These specific products are, from what I see, is on the rise.
Yeah, the potential is continuing. It's enormous. John, did you want to weigh in or?
Okay. Yes, in my jurisdiction, in addition to what we already have, that's the usual, fintech, PTSP, that's the payment terminal service providers. Those are the set of companies that provide POS terminals. And then we have a couple of them like that. So most of the, upcoming fintech companies that we're having now, because they feel the market is saturated, well, which is not yet, they are actually, aiming towards cryptocurrency. But then they are also aware that, trading it as, as a currency in Nigeria is not illegal, but not allowed, prohibited. Right. So most of them are going through the route of a virtual assets service provider, right? And then or a digital asset custodian. So, but then because the Securities and Exchange Commission actually allows for that. So most of the fintech companies in Nigeria, so yeah, that's what they are aiming at currently.
Thank you. So we have got another question. It says, clearly there are a lot of emerging issues that industry is grappling with. With that idea in mind, how does the panel see the IMF's work on fintech evolving? I guess, yeah, please go ahead.
Sure. Very honestly, I haven't worked very closely with IMF on fintech issues, but what we do have in UAE and in the Gulf region is the Arab Monetary Fund, which has a lot of influence from the World Bank and the IMF. And as a part of the fintech working group, I've seen a lot of interest in developing policies, especially around digital identities, eKYC, let's say other sectors like crowdfunding, so on and so forth. And we at the back end have seen tremendous support from IMF to at least start that conversation in the Gulf region. And I'd like to believe that there's a lot of standardization, at least in terms of approach, that has happened in the Gulf region because of that in the last few years. Especially, I can say this for digital ID and eKYC. I can say this for some other concepts around crypto and how it's to be approached. So, like I said, I haven't worked directly with IMF, but at least the subsets of it is something that I've seen get largely impacted for good reasons in the Gulf region.
Yeah, it sounds like they're going to be involved in it if they are not already. Certainly. Any other thoughts on that? Or another question we have is, what are the recent developments in crypto regulations over various jurisdictions, and what are some of the main differences?
Yeah, maybe I can just give a bit of intro to that topic. Of course, it's quite wide range of developments are happening nowadays. But if we need to distinguish some like major differences, I think we are now seeing a discussion period, especially around US regulator just seeing crypto as securities, and they have a different interpretation, and they have a bit of fight of regulators, whether commodities or securities regulator will take over the responsibility on overseeing the crypto, and this is affecting some of other jurisdictions like Hong Kong, to some extent Australia, and on the other hand, we see European legislator being pioneering an extensive regulation called MiCA. That brings all the conduct issues, all the governance issues, all the liquidity issues, all the safeguarding issues into the plate, and asking crypto firms to be highly educated, governance ready, liquidity ready, and being operated by experienced professionals. And there are some other countries that still sees crypto only from AML perspective. So as long as you get your AML control in place, then you're just good to go and conduct any activities in that jurisdiction, actually including UK right now. I think apart from the certain differences, all these countries are or all these approaches are going to the one direction, that we are getting more detailed regulations. So regardless of where we are right now, I think in a couple of years we will get to see more unified approach. And personally, it's just my personal view, I think European regulator is going to pioneer these differences or discussion period. I'm going to tell you why, because they have brought the most extensive, most detailed regulation up to that point into their jurisdiction, and I think we don't have anything better than that right now. We don't know how it's going to work. We don't know how practical it's going to be like, but we don't have anything better at the end in any other jurisdiction right now. And I think they are like a couple of steps ahead of other jurisdictions, while the other jurisdictions are fighting between regulators, other jurisdictions are fighting between the definitions of the assets or some technical issues around that. That's why I think the European approach will probably pioneer and take over and possibly affect other jurisdictions on the new regulations, because we have seen the similar approach in e-money, we have seen the similar approach in open banking, and both of these were new innovative financial technologies that disrupts traditional finance markets, and they have all been regulated first and then copied by the other jurisdictions. I can't see any different scenario. Of course, there can be. I'm not a fortune teller, but I can't see any different scenario in that under these circumstances, and I see that more countries will probably follow Europe's steps on more detailed and extensive regulations. And I think biggest issue before we getting there is that now we have a problem of definition. So we used to have different types of tokens, security tokens, utility tokens, e-money tokens, but now we have like, after especially what happened to the stablecoin in the stablecoin market, now we have to have more the definitions, whether it's a fiat-backed stablecoin, whether it's an asset-backed stablecoin, if it's an algorithmic stablecoin. And now we have to work on the definitions, and we have to unify the definitions itself, so we don't see anything as a cryptocurrency in Europe, but a security in America, and probably a commodity in some like APAC country, for example. I think biggest issue around crypto regulation and mass adoption is the problem of definition. And once we get these unified, of course, it will take time. I think we will more likely to see a huge adoption and a real disruption to the traditional markets.
I think so. Definition, unification, and adoption. I think that's where we're headed. But yeah, it certainly presents some enormous challenges, but also enormous opportunities. Yeah, thank you.
Exactly. Yeah. This is like a curse and a blessing. As a lawyer working on the regulatory space, of course, it's like more work for me and more need for lawyers. But I think when you think about the whole industry, we inevitably will need to go there and see a unified approach on cross-border transfers and cross-border transactions.
Yeah, absolutely. So another question we have is, what are well, I think we probably touched on that. Maybe finally here, to kind of wrap it up, what are the main topics that crypto companies need to be careful about if they want to stay compliant?
Yeah, I think I can also maybe give a bit of entrance on that as well, and then we'll let other panelists contribute. I think the biggest issues that we see right now, of course, this question will depend on the jurisdiction, but the first thing first, they all need to have AML control. So we have to know that crypto is not a Wild West anymore, and wherever you are, whether you are in some Caribbean island with no regulation, or in a well-developed country in other parts of the world, so you inevitably will need to give some accountability. And without AML controls, you're very likely to get in trouble. So we have seen this in FTX, for example, very well. Whether you are in Bahamas, you can get into troubles. So it doesn't mean that you're being unregulated. You are not being regulated. Doesn't really mean that you're not accountable. And we have seen in my home country, Turkey, we have seen Turkish authorities seized FTX assets directly and starts a criminal proceeding against Sam Bankman-Fried personally. So whether you are in Bahama, you think that you are immune from the regulation and accountability, your assets seized in Turkey, and you have a criminal proceeding started under your name in a very short amount of time. So this is a very important lesson to take away, especially with the AML controls. And also, I think all the founders and senior members of any crypto exchange will have to know that even though you are not regulated, you are responsible under general provisions. So you have to act with integrity. You can't get into fraudulent trading. You can't get into any fraud with your investors, for example. So these are all actually crimes and liabilities as a director or a senior member of this company. So not just because you're not regulated by a Securities Commission or FCA doesn't really make you immune from the problem. So you have to have AML and governance control regardless of where you are, and depends on the jurisdiction. You will probably need to get even more.
Yeah, definitely. Anybody else? John?
Okay, yes. So amazing, amazing. All right. So on a lighter note, you see, I've encountered companies, crypto companies who just say don't want to have AML. We don't want to have AML, and it's not necessary. We are not regulated here. And what amazed me is that they actually what they want to do is actually legit, and but they are just scared of regulatory oversight. And I think that's one of the lessons we actually need to learn from FTX, right? Everybody's talking about FTX because it's the latest gist in town, right? So personally, I think another thing that a crypto company should have to be compliant is to have a solid corporate governance, right? Yes, still drawing from FTS issue. SBF actually transferred money from FTS accounts to Alameda Research, and I mean nobody even questioned him. And then people are now saying that okay, probably the CEO of Alameda Research has some kind of intimate relationship with SBF. Well, all speculations. But then if there is a solid corporate governance structure, there's management, the board of directors are active, then they should be able to internally control such movement of funds, right? And they should be able to say no, right? The funds cannot be moved or something. SBF should not be the alpha and omega of FTS, right? Since there are people there to ensure checks and balances, right? So in addition to having anti-money laundering, and KYC policies, I think having no matter how small, right? No matter how small the company is, it should actually, effect a solid corporate governance mechanism in the company. It's very important.
Yeah, absolutely. I don't think FTX will be the alpha and omega. It certainly created a shockwave, but I think we'll see life carries on after this. The dust settles. We hope sooner than later. Great. How about you, Akshata? Did you want to?
Right. I think just a very quick last thought on that. I think just it's important for companies to remember that client money is client money. Once somebody has contributed money on your platforms, it doesn't make it your money. There's a reason why globally regulators have concepts of client money accounts, relevant money accounts, escrow accounts, all sorts of concepts and names, because the idea is to keep those funds segregated from your operational funds or your vacation funds. So I think that's just like a thumb rule for anyone who's in the crypto space.
Yeah, absolutely. And I think a good point was made too by one of the other panel members that although there may not be specific legislation in place, a lot of the traditional rules, case law, statutes can be applied, especially, for example, in the Turkish jurisdiction where they're seizing assets and commencing prosecutions. And I think until there is more widespread legislation, more uniformity, that traditional approaches can and probably will be used to make and hold people accountable. And I think that there will be collateral benefit to the fintech blockchain community. So I think it's going to benefit in the short run until something more complete and more uniform and widespread is implemented. So yeah, that's great. I think we've had a very fascinating and robust discussion. Obviously, there are a lot of benefits and risks. It's a new technology, technologies. Web3 is, the latest, and I'm sure there will be, benefits and discoveries and other technologies that will piggyback and follow. So yeah, very good. Thank you all again for your time and for your contributions. And I'd like to thank WLA for sponsoring our discussion, this series of discussions as we lead up to Dubai 2023. So hope to see you all again, and perhaps in Dubai for a very nice time and further interesting and robust discussions. So thank you very much.
Thank you.
Thank you very much.
Thanks everyone.
Thank you all.
And you know, catch up with people either listening or you know, I'm paneling together somewhere sometime.
Fantastic. Look forward to it.
Yeah.
Let me just conclude by thanking all the panel members for sharing their valuable insights and our esteemed moderator for hosting such an amazing session. We definitely look forward to more such interactive sessions and engagements in future. Thank you to our lovely audience for joining us. We really appreciate your interest in this important topic of today's discussion. Before I end the recording of this session, it is accessible on World Law Alliance LinkedIn page and YouTube channel. So if anyone has missed in case, you can just access the videos on our platforms. Also, we are also blockchain, fintech, and law conference in WLA Dubai, as mentioned by Mr. Patrick. It's the first ever multidisciplinary conference at Crown Plaza Hotel, Sheikh Zayed Road, Dubai. Registrations are still open at the early bird price, which will end very soon. So if any speaker is interested, please mail us on contact@worldalliance.com. Thank you again for joining. See you until next time.
Thank you.
Thank you.
Thank you.
Thank you.
Thank you.